Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Tuesday, March 7th, 2023. Before I walk through all the charts, just want to encourage you to please click like, if you would, each and every time you watch the daily Apple report, and subscribe to the Wicked Stocks YouTube channel. And if you would, share the content with friends and colleagues. I did want to mention something that I forgot to last week, actually for Monday's report, and that is the TLT. I cover the TLT on a weekly basis. That is part of a wickedstocks.com a monthly subscription that, of course, includes the Triple Q and the SPY Daily SPY and Q, the 2 stock picks a week. I could go on and on and on. A lot of content we provide all week long, and every week we do a TLT. And this shows a meaningful channel bottom that had been a target for a few weeks at 98.94 this week. We came off of it last week. We even closed higher on the week following a test of this horizontal structure, holding above 98.94. I do see over the next couple of months this long-term descending speed line at 112.97 in reach. And that, obviously, in terms of the macro dynamic of the economy, that would sort of subdue the tension around interest rates right now and inflation data. I don't know, obviously, what that would entail, but I do think what it would entail with respect to the stock market is support for the stock market, obviously, as interest rates hold steady or even decline over the next couple of months. The stock market has room to continue recovering as we move into the third quarter. Inversely, if we close below 98.94 at the end of this week, we enter another sell signal that should, over the next couple of months or sooner, result in 91.07. So, if the jobs data on Friday is still as strong as it was last month, for instance, there may well be a settlement this Friday below 98.94 that would heighten the concern around continued higher interest rates, real market interest rates, not just the Fed hikes. That obviously would likely drag, or at least put a damper on, the stock market's ability to muster significant strength as we move into the third quarter. May actually involve a sell-off. So that's all I'm going to say about this. I wanted to mention that this chart is there. Let's jump into the big picture for Apple and work our way into the day. We came off of long-term support in January in the 120s, and at the time mentioning the low 170s as a possible objective that would be in reach this year, perhaps. That perhaps became indicated when about a month ago we settled above this descending channel top that today is at 141.37. Obviously, that's no longer an objective. It was for a few days, I should say, earlier last week until we had this rally. And essentially when that was rejected was when we closed last Friday and actually opened just above it as well, this descending 1/3 speed line that today is at 146.89. And as it turns out, that 146.89 speed line is converging or closing in on this rising 2/3 speed line that actually managed to capture last week's lows. I reduced it to a session containment level. In hindsight, obviously, I wish I had left it at a 3 or 4 star support level, but that's just kind of the way it plays out sometimes. 145.85 to 146.89. I don't expect to see it unless we close today back below not only 152.13, but also a 151.42. So there's a couple of things going on here. That blue line is a descending 2/3 speed line, and the black line is a descending channel top. They're in the 151.42 to 152.13 area. They can absorb selling into later week, through the rest of the week. And from here, we have a secondary buy signal that should result possibly this week, over the next 3 to 5 days, I'll say, into the upper 150s, low 160s. 159.93 is a long-term descending 2/3 speed line in combination with a 5/8 Fibonacci, both based on the all-time high from November of 21 against the more recent January low. So, holding above 151.42 to 152.13, this area here maintains, I think with present volatility especially, a 3 to 5 day buy signal into the upper 150s, low 160s, where we can top out not only through next week, but possibly the balance of March and come off of here again. So for those of you who trade the 1 to 2 week and possibly 3 to 5 week time horizons as we push into the upper 150s, low 160s. And if you're long, for instance, you could consider liquidating some, if not all of it, and then playing the short side, whatever that means to you, shorting the stock, or perhaps buying 140 out of the money calls that don't expire for at least several months. I'm not saying we would have an indication of 140, 137, but long-term parameters tend to seek other long-term parameters. So when you test a long-term support or resistance, the market oftentimes will fall back to long-term support if it tests resistance. And so we would be monitoring this along the way, of course, for clarity with respect to a 140, 137 target. But if we push into the upper 150s, you don't have a strong argument for me if you reach out for 140 out of the money puts that don't expire for at least several months. And of course, the further out you go, the more expensive that put would be, but you also have more delta or more bang for your buck with respect to eliminating the time decay element on that option as you move through time. So that would be one big picture play. If we close above 160.49, then you want to liquidate that 140 put and actually reach for a 170 or 172 out of the money call that doesn't expire for at least a couple of months. I think this would be a realistic 2 to 3 week rally, but you never know. We might get snagged along the way and get caught up in a consolidated framework, so forth and so on. So I'd go a few months out, and that would be the next sort of big picture play. In terms of, the near term, I'd already mentioned how the 150, 142 to 152, 13 area is decent bottom picking now as we move through the rest of the week. And if we dip into this zone and you're a 1 week, 3 to 5 day swing trader, this would be the play. Holding above 152.13, anticipating 159.93 as a 3 to 5 day target where profits can be taken and a short entry can be made over the same 3 to 5 day time horizon. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Downside, if we close today below 150, 142, 146.89 is likely. That could be within a single day. It could be several days. But once again, that is the 3 to 5 day swing trade. Playing the short side below 150, 142, anticipating the 146.89 to 145.85 area where profits can be taken on that short position and long entry made on a 3 to 5 day time horizon. And perhaps, as I mentioned in Monday's video, perhaps as we slip into the mid 140s, if we slip into the mid 140s, the 2 to 3 week time frame, you could reach for 159 or 160 out of the money calls that don't expire for at least a month. And that would be, once again, if we slipped back into the mid 140s, and once again, not anticipating the mid 140s again, unless we close today below 150, 142, and then I think they're in reach by Friday's close. Last thing I'll say about this is if we were to close below 145.85, we take on another 3 to 5 day sell signal down to this long-term support at 141.37. I've been mentioning how this is good support, able to contain selling into the third quarter. And in fact, when we closed above it about a month ago, it set off a 3 to 5 month buy signal, as you're well aware if you've been following the Apple report now for the last month or two. So you know that the descent down to 141.37 was, by most measures, considered a counter trend sell-off. In other words, it was a near-term bear move in the midst of a long-term bull move. And that's really what we're seeing here. Now, of course, there are other fundamental developments. Goldman Sachs, for instance, was part of the rally that occurred today. But we gave most of it back. And so I will say, though, nonetheless, and this is probably the last thing I will say, is that low 150s, 150, 142 to 152.13, decent pullback support into later week. This is bottom picking territory. If you got short at all on Monday, this could be an area where you take some profits. Upside today, I guess I didn't mention that. 157.50. You have to go way back here. I think this is an October high. This is the high. We came very close to retesting it a month ago. We got to 157.38, but I still have 157.50 as an intraday resistance area. If we push through 157.50, we just might reach 159.93 to 160.49 intraday, where once again we can top out for the week, possibly through the rest of March, and if settled above, would then signal low 170s within several more weeks. I think I'm just going to leave it at that. I'll leave you with this image for Tuesday's Daily Apple Report. Of course, I'll be back tomorrow with Wednesdays. Please click like, subscribe, check out wickedstocks.com, and we'll be back tomorrow.